Okay, so I think today we have to do the question number 9, if I am not mistaken. Am I correct? Question number 9. Good. So let's read the requirement first. They're asking us to prepare the statement of financial position. That means the balance sheet. So as at 31st December 20XX. For the last day, we will prepare the balance sheet. So here they have given some items. So first we'll classify these items into the assets, liabilities, and equity. So this capital is the opening capital, but what we need is the closing capital. But let me write down opening capital. Land and building, it's a long-term asset, non-current asset. Furniture also long-term asset, a non-current asset. And this is the opening stock because this is the starting date. In balance sheet, we have to write the closing values. In balance sheet, if not statement of financial position, we have to write the closing values. So here we have the stock, opening stock. Trade debtors is a current asset. Drawings, it's a reduction of equity reduction. 2-year investment, non-current asset. Cash, current asset. Machinery, non-current asset. Net profit for the period. This will increase the equity. And next one, bank loan, non-current liability because it's a 5-year loan. Trade creditors, current liabilities. Bank overdraft, current liabilities. And the next one, accrued expenses. Expenses not yet paid, so we have to pay. Accrued expenses means expenses, past expenses or past bills not yet paid, so we have to pay it. So it's a current liability. In this question, I feel there is a mistake. I think maybe stock value is wrong, but let's do the calculation and see. So let me open up a Excel sheet. Question 9. So let's starting with the business name. What's the name of the business? Sarani business. Sarani business. Sarani business. Sarani's business. Statement of financial position. As we will prepare the balance sheet for a particular day. We will prepare the balance sheet for a particular day. We will prepare the statement of financial position, if not balance sheet, for a particular day. So we have to use as income statement, year ended or month ended based on the period. Balance sheet as at 31st December 20XX. So you have to start the balance sheet with the non-current assets, long-term assets. So we mark the long-term assets. First one, land and building, 340,000. Land and building, 340,000. Land and building, 340,000. Then we have furnitures, 92,000. Then we have investments, 2-year investment, 60,000. Then we have machinery, 40,000. So we are done with all the non-current assets. Now let's move to the current assets. I think they have mistakenly given this one as the first day. So we have started the business accounting period of Sarne's business. I think this is the 31st December maybe. So let's take it as 31st December and we'll do the calculation. Just change that. So this is not opening stock. This is the closing stock. Closing stock is the current asset. Then current assets. Closing stock. So here, let me take the total. Then that is done now. It is 533,000. Closing stock 56,000. Then we have trade debtors 48,000. Then we have cash 24,000. Cash 24,000. I think we are done with all the assets also. So let's take the total of current assets. It is 128,000. Now let's take the total asset value. 660,000. Total assets 660,000. So we are done with one side. Now we have to take the equity and liability. So let's start with the equity. Equity people, we have to take the closing equity. But here they have directly not given the closing equity. We have to find it. We have to find the closing equity. So how to find the closing equity we learned last week also. Opening, not closing capital, whatever. Opening capital at the additional capital minus the drawings at the net profit. So we will get the closing capital. Same thing that we did last week here. Same thing that we did last week. So let's take the opening capital 320,000. This is opening. 1st January. No? 1st January means opening. 320,000. No additional capital information is given in the question. So we'll assume it's 0. And drawings information they have given 15,000. Drawings will reduce the equity minus 15,000. Then net profit, they have given the net profit 140,000. Net profit will increase the equity. Now we can get the closing capital. That's what we need. $445,000. 445,000. If you all are done, let me know in the chat box. Okay. Now let's move to the next one. Long-term liabilities, non-current liability. Non-current liability. So in this question, we had a bank loan, 5-year bank loan, 80,000. Then current liability. We have trade creditors, 80,000. Then bank overdraft, 35,000. Then we have accrued expenses 20,000. So we have ticked everything. We have ticked everything. Total current liabilities 140,000. Now let's take the total here. 445 plus 80 plus 140. 665,000. Total equity and liability. So where is the error? Let's find it. 320 opening capital, no additional capital. Drawings 15,000, that is also correct. Net profit 140, bank loan 80, trade creditors 80, overdraft, accrued expenses 20, not 25. Accrued expenses 20, not 25. So it is 135,000. 135,000 because accrued expense is 20. We have mistakenly typed it as 25. Now correct. If everyone fully done, just let me know. Done. Good. So now let's move to the last question. Last question. So people, here they have given us a trial balance. Okay. Now these are first few questions that we are doing now. Generally, there is a method where that I follow, where I teach to the students. When they give a trial balance, mark everything in the trial balance first. Then move to the preparation of the financial statements. So here, let's start. Okay, we'll start. They have given the capital. So generally people, when they are giving a capital in the trial balance, it is before making the adjustments. That means before making the drawings adjustment only will be there in the trial balance. So by making that adjustment only, we have to take the closing capital balance to the balance sheet. Okay. We have to take the closing capital balance to the balance sheet. So here, I'll just write, this is a part of equity before before the adjustments. So this is not closing equity. This is not closing capital. We have to find the closing capital. Trade debtors, debtors, another name receivable. Receivable is a current asset. Trade creditors, payables, payables, current liability. This is opening stock. Opening stock. Opening stock. Purchases is a part of cost of sales. So this is also part of cost of sales. Opening stock is a part of cost of sales. Purchases also part of cost of sales. Carriage inwards again a part of cost of sales. Sales commission. So sales commission, it's there in the debit side. Debit side. Since it is in the debit side, it is an expense. Sales commission expense because it's there in the debit side. If it is there in the credit side, it is sales commission income. This is distribution expense because connected with the sales, I told you, expenses connected with the sales, marketing, customers, distribution, delivery. Everything will come under the distribution expenses. Insurance expense is admin expense. Rent income. Rent income is other income. Discount received is other income. Sale is sale. No? Sale. Discount given is connected with the customers. Distribution expense. Machinery and equipment, this is non-current asset. Buildings, non-current asset. 4-year bank loan, non-current liability, long-term liability. Interest expense, finance expense. Bank overdraft, a current liability. Cash in hand, current asset. Bad debt connected with the customers, again distribution expense. Salaries of admin staff, administration expense, admin expense. Bank charges, finance expense. And here they have given an adjustment. So closing stock, do remember people, when they give closing stock, always do like this. So entire stock is sold, which means closing stock is 0. When they give the closing stock, always put 2 arrows like this. Always. You have to follow what I am telling. One people, closing stock will be recorded in the cost of sales. Other one in your income statement. Under the cost of sales, it will be recorded. Other one in your balance sheet under the current assets. In your balance sheet under the current asset also you have to write the stock. So in this question, for both the places you have to write 0. Remember that. Closing stock will be recorded in 2 places. One is in the cost of sales when we are calculating the cost of sales in the income statement, and in the balance sheet under the current asset. Then they came a ensure when you get the paper, write those 2 arrows. Write one cost of sales, other one is current asset. You have to write for these 2. Now here what they are asking, say prepare the profit or loss statement for the year ended 31st December 20XX and statement of financial position as at 31st December 20XX. I told you. Balance sheet always as at. Income statement may be year ended, month ended, week ended, whatever ended. That's what income statement. Now let's start preparing, people. So we are going to prepare both the question 10. Okay. So whose business is this? Bimali's business. Statement of profit or loss. If not, you can write profit or loss statement also. Both are fine. For the year ended 31st December 20XX. So let's start with the sales. Now you can't think and wait about the formula. Okay. We learn income statement, two parts are there. First part you have sales, cost of sales items, then the gross profit. Then second part you have income and all the expenses. All the expenses, distribution, admin, other, finance. So how much is sales? 650,000. 650,000. Once you are done with an adjustment, put a tick. Once you are done with an item, put a tick. 650,000. Now, cost of sales. So we learn how to calculate the cost of sales, people. First, you have to take the opening inventory. For the opening inventory at the purchasers. And in this question, we had some carriage inwards. So how much is the opening inventory? 16,000. Purchasers 395. Carriage inwards 15. So when you are starting the year, you had 16,000 worth inventory. During the year, you purchased 410,000 worth inventory. So you had 426,000 worth inventory to sell. Inventory had to sell. From this, you have to deduct the closing inventory. Closing inventory in this question, 0. Nothing. So we are getting a cost of sales value of 426,000. Cost of sales. So once you mark this inventory people in the income statement, go and put a tick. මෙන්න මේකට ටික් එක දාගන්න. මෙයා හරිනේ. මෙයාව ගත්තා. Done. Closing inventory took to the income statement. Closing inventory took to the income statement. Done. Now we have to take only for the balance sheet. In this question we don't have, but that's the correct way where you have to do. Now let's calculate the gross profits. 224,000. So first part is done. Trading part is done. From the sales to gross profit, we will call it as the trading part. That part is done. If you people also done, just let me know. Good. Then now the second part, other income and the expenses. So other income, discount received is there. Rent income is there. Rent income 30,000. Discount received 6,000. So that is also done. Now we have to do the expenses, starting with the distribution expense. So sales commission 9,000. Sales commission 9,000. Then next you have discount given 3,000. Then bad debt 7,000. So we are done with the distribution expenses as well. Now let's move to the admin expenses. So let me take the total. What are the admin expenses that we have? Insurance expense 12,000. Then salaries, admin salaries 25,000. That is also done. In this question, no other expenses, so we can move to the finance expenses. You have interest expense 16,000. Then bank charges 4,000. So we are done with that one as well. So this value and this value and this value 76,000. And final net profits 184,000. 184,000. If you all are done, let me know, people. Okay. Now let's move to the balance sheet. Statement of financial position. Bimali's business. Statement of financial position. Asset. Asset. 31st December 2086. So it is starting with the non-current assets. So let's start with the non-current assets. Here we have machinery and equipment 120,000. Next one, building 500,000. So total non-current assets 620,000. Then the current assets. Current assets starting with closing inventory. Closing inventory. So in this question, no closing inventory. 0. So put a tick for that one as well. So these are small important key things that I am telling you. Putting two arrows, and once you write it in the cost of sales, putting a tick. Once you write it in the balance sheet, putting a tick. These are important things I am telling you where you will miss these things in your exam. Then we have trade debtors 34,000. Cash in hand 155,000. Cash in hand 155,000. So the total value is 189,000. Now let's take the total assets. $809,000. Give me a second, people. Give me a second. So here 400,000. No additional capital in this question and no drawings also in this question. So directly we can take the net profit amount. Net profit is 184,000. So this is 584,000 closing capital. So we got what we need. We needed closing capital, we found it. Now non-current liability. Non-current liability. So non-current liability is what we have in this question. A bank loan is there 160,000. Then current liabilities. Trade creditor 45,000. Then we have bank overdraft 20,000. So total current liability is 65,000. Then total equity and liability summing up to 809,000. So your balance sheet is balanced. Total assets equals equity plus liabilities. Total assets equals equity plus liability. 809,000. If you all are done, let me know. I got only one D. What about others? Done? Good. So people, we are done with the first accounting unit, which is there in your grade 11 syllabus. So grade 11 syllabus accounting is very small, people, not big like grade 10. Syllabus is small because here what we are doing is whatever the thing that you have studied in grade 10 apply. But there will be questions in your paper from grade 11. There will be questions, but content is very small. Syllabus is small, not big like the grade 10, because in grade 10 that is the area where we put our base. We learn the base. So we can finish off the accounting parts easily in grade 11 syllabus. It won't take that much of time like grade 10, because in the grade 10 only we are laying a proper base for the account. Now all the things that we did here, where we carry forwarded from the grade 10. What are the non-current assets? What are the current assets? What are the non-current liabilities? Current liabilities? What are the income, expenses? All those things we studied in the grade 10. So nothing new is there to study here now. So if you are very weak in the grade 10 people, then no point of studying grade 11 actually. Then better go to grade 10 first, then study grade 10 and come to the grade 11. Then you will get a better understanding. So people, next chapter, I am not going to start it now because I want to continue the next chapter for 2 hours, like one class. By taking a proper one class, then only you will be having a very good learning. So if I start the next chapter now, people, I will have to finish it within 1 hour. So I'm going to end the class today. Next week, I am starting the financial statements with the adjustments. For your exam, for sure, people, from that chapter, you will get minimum 10 marks. Minimum 10 marks you will get for sure. In your paper 2, for sure, there will be a 8-mark question. Part 2 of your paper. There will be a 8 mark for sure. So very important chapter, that one, and it is a chapter which is carry forward from this particular chapter. So here we did without any adjustments. So in that chapter we will be learning with the adjustments. So next week, by taking the 2 hours, I am going to give you a complete picture about that particular chapter, people. So today's class, that's it for the day. We will be meeting again next week.